This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
National insurance contributions are a further tax that is charged in relation to employment income and the income from the self-employed, i.e. trading profits. We'll deal firstly with that which attaches to employment income. Now, the types of national insurance contribution paid in relation to employment income and the contributions paid in relation to the self-employed income, the trading profit, are known by reference to different classes. Now, again, all we need to be aware of is the labels, not the derivation of where those numbers and classes come from. So when looking at employment income, we're talking to begin with about NIC Class 1 contributions. And in relation to the employment income, Class 1 NICs will be paid by both employees and also by employers. And that means when we look at the tax rates, this is going to be a significant amount of taxation that is raised by HMRC in relation to employment income. Firstly, in relation to employees. Now, on top of their income tax liability that we already know about in relation to your employment income, employees' contributions to Class 1 NIC, these are known as Class 1 NIC employee, or sometimes referred to as primary contributions. Class 1 NIC, either employee or primary contributions. The contributions begin from when the employee is age 16 or over. For 2015-16, the rate of employee Class 1 NIC is at a rate of 12%. Now, of course, these rates will be given to you, and they'll be on your rates and allowances page, so you won't have to memorise them. I think by the time you come to do the exam, you will know them without reference to those rates and allowances pages. But your main rate is at 12%. Now, this level of Class 1 NIC is payable in relation to cash earnings. Now, what we know from Chapter 9 on employment income is that one's employment income may be generated in all different forms. Your obvious main one, your wage, your salary, topped up potentially by bonuses or commissions. Now, all of those are cash payments, and your cash earnings will therefore have Class 1 NIC paid in relation to that by, again, both an employee and, as we'll see, an employer, but at the moment we're dealing with the employee. Now, also included within cash earnings, we would have any vouchers that are provided by the employer to the employee that may be exchangeable for cash or indeed goods or services there. That too would be classified as cash earnings. There may be other payments that are made by the employer in cash to the employee. For example, if the employee uses their own car for business mileage, then, as we know, in relation to that business mileage, there are approved mileage allowance rates, 45 pence per mile for the first 10,000 miles, you will recall. Well, if payments are made in excess of those approved mileage allowance rates, then in addition to the income tax liability that arises, it's part of your employment income assessment, there'll also be a Class 1 NIC liability that will arise as well. So we're talking about cash earnings there. Now then, that 12% rate only applies where those cash earnings exceed a threshold. Now, all these limits, again, given on your rates and allowances page. Good idea, if you don't already have your rates and allowances page open next to you, to again open that up, because we're going to be using these levels, these rates, these limits extensively within this chapter. So if not already, do get that page open and you can follow through and see these numbers as we refer to them, and then you'll be able to use them for yourself when it comes to practicing with examples within this chapter. So we established the level of cash earnings. Mostly for us in a question, it's likely just to be the salary figure for the year. So we get the cash earnings, and we will pay at a rate of 12% on those cash earnings above from £8,060, over £8,060, to an upper limit of £42,385. So on any cash earnings between those limits, 12% Class 1 NIC is paid by the employee. When we go above that upper limit for earnings above £42,385, then we get a reduced rate. Then the rate is just 2%, payable and with no limit. Whatever level of cash earnings then the taxpayer may have in the 15-16 tax year, it's 2% above the 42,385 upper limit. So the percentages 12 and 2, the limits 8,060 and 42,385, they're relevant to the employee, all provided on your rates and allowances page. You don't have to memorise those numbers. Now, we start paying it once the employee is aged 16 or over, and that will cease when the employee reaches pensionable age. That's when it stops. Now, in addition to those significant, 12% is a significant number here, in addition to the employee contributions, the employer must also make their own contributions. Now again, these will be known as Class 1 employer contributions, or may also be known as Class 1 secondary contributions. Remember, we referred to the employee as being primary contributions, the employer as secondary contributions. So if you see that language used in the exam question, we're talking about the employer Class 1 contribution. Now the rate of employer Class 1 NI, again given on your fact sheet, as you'll see now hopefully in front of you, 13.8%. Again, it's paid on those cash earnings. This time we've got a slightly different threshold from which point it is payable, £8,112, again given on your rates and allowances page. Again, these are payable so far as the employer is concerned from when the employee is 16, but there is no upper age limit. And also note there, we've said that the rate is 13.8%. So there's no upper earnings limit here in relation to the employer contributions. Anything and everything above 8,112, not just up to 42,385, but to up to whatever is the level of cash earnings, is 13.8%. So for the employee, we have a lower limit below which we do not pay. We then have an upper limit, and between lower and upper, the employee pays 12%. Above the upper limit, pays 2%. For the employer contributions, a lower limit, this time 8,112, below which we do not pay, the employer does not pay, and above which, on all cash earnings above that limit there, 13.8% is paid. But the employer contributions don't stop there. What we've seen is that the Class 1 contributions are based on cash earnings. But as we know from Chapter 9, the employer may provide an employee with various other assessable benefits. So the Class 1A contributions that we also need to be aware of. Class 1A NIC is payable by employers, only by employers. So again, remember, who pays what contributions? The employer will pay the Class 1 NIC employer or secondary contribution on the cash earnings, and will also pay Class 1A NIC on any taxable benefits that they provide to employees, as we have computed within Chapter 9. And again, standard rate 13.8% on the taxable value of those benefits. But that is only paid by the employer, not by the employee. Now, in relation to the contributions made by the employer, those Class 1 secondary contributions on the cash earnings, then again basically encourage employment, to encourage employers to employ as many people as possible, clearly a good thing for the government, for the economy, and in terms of the HMRC for tax take. They've introduced an employment allowance, and that employment allowance is £2,000 per employer. This is not per employee, this is per employer, to reduce the burden of the employer's Class 1 NIC payable. Now, this is only a deduction against the Class 1 NIC payable by the employer. It is not a deduction against any other NIC that may be payable by the employer, for example, Class 1A, or indeed by the employee. So, if the employer's Class 1 NI for the tax year were to be £5,000, the amount actually payable by the employer reduced by £2,000 employment allowance, so you'll only actually have to pay £3,000. If the employer's Class 1 NI liability is less than £2,000, for example, say £1,500, then there is nothing to pay. It's reduced enough. You don't get any money back. They don't pay you, but it's just that there would be nothing to pay. Now, that employment allowance, as we've said, does not reduce the amount of employer's Class 1 NI. So where you've just had £1,500 worth of Class 1 payable by the employer, it is reduced to nil. You can't then take the balance of that employment allowance of £2,000 and set it off against any other NI liability. That's it. So, does not reduce employer's Class 1, nor would it reduce Class 1 employees' NIC. So we now know, in relation to employment income, what NIC contributions may be made by the employee, Class 1 employee or primary contributions, by the employer, again Class 1 NIC, but this time the employer contributions or secondary contributions paid in relation to cash earnings. For the employee, a lower limit below which you pay, and then an upper limit from lower to upper at the standard rate of 12, above the upper just 2%. For employers, above a slightly different lower limit, everything above that at 13.8%, nothing below that. Employers also have the pleasure of paying Class 1A contributions in relation to the taxable, the assessable benefits. On the whole lot, 13.8%. In relation to the Class 1 secondary contributions, the employer Class 1 contributions, employers now, as an encouragement to employ more people, are given an employment allowance of a maximum £2,000 to deduct purely from their Class 1 NICs. Now let's see how this works in relation to a little example. So here we go, example 1. So have a little read through the information there, and we've got to not just state what NICs are payable, but to calculate the Class 1 and also Class 1 NIC liability in respect of the employee. Now, how a question again could be set here as an objective testing question would be to determine what levels, what types of NI were payable. So we see that we're dealing with an employee of a company Riga Limited, paid £50,000 per annum. So in relation to your cash earnings, your salary, you know that there would be Class 1 NIC payable by the employee and also payable by the employer, and was also provided with the following taxable benefits: company car and fuel benefits there. Now, in relation to that, you've got Class 1 NIC, Class 1A NIC payable by the employer. So a question could ask you to simply pick out from 4 different lists provided which are the NICs payable. Here the answer would be Class 1 employee, Class 1 employer, and Class 1A NIC by the employer. What we've got to do, of course, is to calculate these figures. So make sure that you've got your rates and allowances page next to you to be able then to apply to, or in relation to the salary, 50,000, Class 1 employee, Class 1 employer, and in relation to the taxable, the assessable benefits, the employer's Class 1A NIC. Now you have a go at that for yourself. I think you should be able to deal with that, but I'll talk you through it again in a moment's time. So pause at this point, while you attempt your own answer. Okay, well, let's see what calculations we've performed. We know that we've got to calculate both the Class 1 employee and employer contributions and also the Class 1A employer contributions. So the Class 1 to begin with, that's based on cash earnings, and that's your salary, £50,000. Now, so far as the employee is concerned, we've got a lower limit below which we do not pay of £8,060, and then an upper limit at which point the level changes from the standard 12% to the reduced rate of 2% there. So nothing up to £8,060. Now we've got a salary of £50,000 that goes above the upper limit of 42,385. So 42,385 minus what was the lower limit, 8,060. All of that, therefore, is then to be taxed at 12%. Above 42,385, well, the salary is 50,000, so 50,000 minus the 42,385, that will be at 2%. I could have if I'd wanted to, and you'll see in the model answer I've shown that up to 8,060, of course, is at 0%. There are no Class 1 employee NICs below that 8,060. So between the lower limit and the upper limit, we pay at 12%. Above the upper limit, up to the level of cash earnings, we pay at 2%. Now again, you don't need me to do those calculations. You can do those for yourself if you have not indeed already done them. That will be the employee Class 1 NI, and will be the only contributions to be made by the employee, but will amount to a significant number. That's going to be a big old figure of tax payable by the individual employee. So far as the employer is concerned, a slightly different lower limit below which we do not pay, 8,112. But a single calculation required here because there is no upper limit. So 50,000 being the cash earnings minus just that one, it's a lower limit, but it is the limit for employer, 8,112. What is the rate for the employer? That, of course, is 13.8%. Again, a very significant number. Going to be bigger than the employee contributions there. Finally, Class 1A employer. That was based on the assessable benefits. That's your 6,400 plus your 4,320, your car benefit and your fuel benefit there. Add those together, what's that going to be? £10,720 there, methinks, and all of that will be at 13.8%, and you will have your employer Class 1A contributions. Now again, at this point, if you haven't already, check out the basis of those calculations and the numbers that you get with the answer in the back to make sure that you have correctly determined the level of contributions. Again, when you do an exam question, make sure you read that question very carefully about what it is asking you to do, especially the case, of course, when dealing with an objective testing question, where if you misinterpret, you get nothing. If you do it right, you get 2 marks. There is nothing in between. So it is critical that on those objective testing questions, you read those specific requirements carefully. Now here they have, or I have specifically told you what to calculate. Class 1 and Class 1A NIC liability in respect of the employee. Now in respect of the employee, Class 1 is both employee and employer contributions. We've also asked for Class 1A NIC. They might have asked for the contributions to be made by the employee. That would just be your Class 1 employee contributions that you've done here. They might ask you just to calculate the contributions payable by the employer. That's the Class 1 and the 1A. Or they might ask you just to calculate the Class 1 NIC liabilities. That's by the employer, by the employee, and by the employer, but not asking you for 1A. So be very careful as to the precise requirements. You don't get anything at all in terms of being partly right on an objective testing question. You can't get 1, you can't get 1.5 out of 2. You either get it or you don't. So be very careful when answering those objective testing questions, because of course there will be answers in there that can be computed but are wrong. You've got to make sure you've interpreted that question correctly. Take time to get it right. Read the requirement carefully. Again, students often make mistakes here by rushing into the question, not having read the requirement sufficiently carefully. What happens? They get an answer, they think it's right and put it down, but we've misread the question. Be careful, please. Okay, just take a moment therefore to review through that before we'll then move on. When it comes to the collection of the national insurance contributions in terms of how HMRC collect the money, Class 1 contributions paid through the PAYE system, as we learned there back in Chapter 9. Both income tax and Class 1 NICs, that is both the employer and employee contributions. The employer collects at source from the employee, and along with that employee contribution makes their own employer contributions through the PAYE system. So far as Class 1A contributions are concerned, that is paid over as an annual amount following the end of the tax year, payable again working on the real-time information system, as we saw referenced in Chapter 9 again. That's got to be paid by the 22nd of July following the end of the tax year. So the Class 1A NICs, therefore, again paid by the employer for 15-16 tax year, that would be payable by the latest, the 22nd of July 2016, again through the RTI, the real-time information system. Okay, moving on therefore from dealing with, as we said, the employed, now to looking at the self-employed. So over the page we go, and we look at those who are self-employed. Now if you're self-employed, aren't you the lucky one? You get to make 2 types of contribution. Class 2, however, which is very, very little. Again, these figures, the amounts are provided to you on your rates and allowances page. But in terms of those Class 2 contributions, the self-employed pay a flat rate contribution here of £2.80 per week. Again, hardly going to set the world alight, that one, £2.80 per week. And that becomes payable again from the taxpayer's 16th birthday until they reach pensionable age there. When the tax-adjusted trade profit assessed for the tax year exceeds a small profit threshold, again we only have to pay that when the adjusted trading profit exceeds that particular threshold. Class 2 NIC is now payable under the self-assessment system. It used to be payable basically via direct debit during the tax year, but it's now payable under the self-assessment system. We see more of that in a later chapter, and if my memory serves me well, I think that's the chapter 15. And where the tax that is payable for the tax year under the self-assessment system becomes due for payment on the 31st of January following the end of the tax year. So for 15-16, therefore, that would be due on, don't know what's happened to the typesetting here, but that would be due on the 31st of January 17, the 31st of January following the end of the tax year. And that is payable along indeed with the Class 4 NIC. Now that Class 4 NIC and your income tax, which we'll look at in Chapter 15, may very well have already been paid. There are payments on account that have to be made by the self-employed taxpayers, most notably by them anyway, so those amounts may already have been paid. Payments on account don't impact in terms of Class 2, and you just have to pay over your 52 weeks at £2.80 per week there by the 31st of January 17 in relation to the 15-16 tax year. A rather more considerable figure, however, is the Class 4 contribution, and this is very similar in terms of how we go about calculating the Class 4 contributions, very similar to how we dealt with the employees' Class 1 contributions. But the self-employed, as we've said, pay class 4, again based on the assessable trading profits assessed within the tax year. Again, as with your employees, there is a lower limit of 8,060 and an upper limit of 42,385. Again, you'll see that on your rates and allowances page, no doubt next to you, indeed you're looking at it as I speak. So we only pay class 4 NI on the trading income, trading profits that fall between 8,061 and 42,385. And that is payable at the main rate of 9%. Now again, when you go above that upper limit of 42,385, the level falls to a reduced rate, which, just like with class 1, is 2%. Contributions begin again when the employee, that shouldn't be saying the employee, but if the self-employed taxpayer, if the individual here, 16 at the start of the relevant tax year, the contributions cease when the taxpayer reaches pensionable age by the start of the relevant tax year. Again, that should not be saying employee, we're dealing of course with the self-employed. Right, let's see that we can do those calculations. Example 2 to finish this off therefore. Jerome, a sole trader, has trading profits this time, £50,000 for the 15-16 tax year. Now we know that when it comes to class 2 NICs, that will be 52 weeks at, well, you go and copy down what that rate is from your tables. When it comes to class 4 NICs, well, I'd like you to do the calculations as we did before. Again, 42,385 minus 8,060, the difference between your upper and lower limit there, that would be payable at 9%, and above the 42,385 up to the level of trading income, there we're looking at £50,000, that would be payable at 2%. So calculate that for me please, and again just pause at this particular point in time, and then we'll make sure that you have got those calculations correct, and we will then move on. So the calculations therefore shouldn't be too tricky. Again, assuming that the taxpayer has been self-employed throughout and traded throughout that tax year, 52 weeks at £2.80. Work out what that is if you haven't already done it. The class 4 NIC, again split into two calculations. As we have a trading income of 50,000, that's above the upper limit of 42,385. So 42,385 minus the lower limit of 8,060 times 9%, and that will be the main part of your class 4 NI. But as we've said, the trading income has gone above that upper limit up to 50,000, so 50 minus 42,385, and that is at the reduced rate of 2%, and we can work that one through. Check out those answers if you haven't already done so with the answer in the back there, and hopefully we will be okay in relation now to the self-employed and the class 2 and class 4 contributions paid by them. So we should be aware of what are the different types of contribution that are paid by individuals and by, where appropriate, employers. We should know their labels, and we should know the basis of the calculation. That brings to an end, therefore, our brief study of national insurance contributions. Again, always likely to see some involvement now of NICs, obviously given that we have the section A, 15 individual objective testing questions, you'd expect maybe one at least of those to be given over to NICs if it's not to feature as part of either of section B or section C. So very likely you're going to have to do those calculations, or rather more simply, just identify for a particular individual what particular classes of NIC they may have to pay. Whether that as an employee is class 1 employee contributions, whether it is as an employee and self-employed, you might have both, so class 1 employee and then class 2 and class 4 contributions, down to what contributions may have to be paid by an employer. So again, make sure when you use of your exam kit, revision kit, whichever approved provider you've purchased that from, that you've worked those exercises. What we can now move our attention to is the second largest of the personal taxes incurred by individuals in the UK, and that is to look at capital gains tax. So the next few chapters, therefore, given over to looking at CGT.